Life Sciences is the company in focus. The company reported what was a good set of numbers in Q1 FY24 as margins did improve quite handsomely on a Q-on-Q basis. The company previously had indicated that they expect double-digit growth in both the domestic as well as the international markets and also probably looking for some brand acquisitions. To discuss this and more, we have with us Yugal Sikri, who is the MD of RPG Life Sciences, joining in now. Mr. Sikri, hi, welcome to the show. Well, right before we started this chat, we were in fact discussing the race for Cipla, which is very dominant in the Indian pharmaceutical market, in the Indian market. Wanted your thoughts because you're also growing in double digits. You have a strong painkiller drug, which is doing very well. It's around a 60 crore brand in the Indian market now. What is your sense in terms of how exactly the branded generic space in India is probably going to grow at, considering that there's now a lot of traction coming in from the generic segment and a lot of companies which are launching trade generics as well?
I think, first of all, thank you so much, Ekta, for inviting me to your show. Talking about what's happening in the market now, particularly in the context of the generics or trade generics versus branded generics. My take is that branded generics has been the mainstay of Indian pharmaceutical market. Over 90% has been the branded generics. As far as the trade generics is concerned, almost all major companies had the trade generic business for quite some time. And branded generic, to my mind, represent being the branded generic, it represents the quality, it represents the research or whatever work has happened with respect to that particular brand in the market. And therefore, to my mind, though the debate is going on for a very long time, branded generics have been here to stay and branded generics will continue to stay in this market. I understand that government is trying to bring generics. Government is also trying to bring trade generics. They are right in their own assessment. But in terms of the pharmaceutical ecosystem where doctor takes the decision, he understands the quality is critical and quality is assured only through brands. And in our pharmaceutical context, it is branded generics.
Do you expect growth to get dented? And are you feeling the pinch in your segments, in your branded generic segment? Do you expect your double-digit growth to continue?
Yeah, as the trade generics grow, it will have an impact on the branded generics. But I must say in the same breath that the branded generics are here embedded in the doctor's mind, and therefore, and the share of the branded and the trade generics is very limited. So I don't think it will have a major impact, though it might have some impact depending upon how fast or how much of trade generics enters the market and occupies the space.
Right. Mr. Sikri, I was looking at some of the comments that you made in a recent analyst meet, and you said that you are developing broader doctor coverage and looking to improve the productivity of your medical representatives as well and making efforts on cost optimization. So to the point that Ekta said that, non-branded generics will perhaps cause a bit of a dent in growth going forward. At what rate are you increasing your doctor coverage? What are the metrics to view MR productivity and cost optimization? What does that mean for your overall numbers going forward?
Yeah, I think these are the three pillars which you just mentioned of our domestic formulation business, and all the three pillars. One is the customer coverage. It is extremely important. We are covering 85% plus of the target customer at the moment. And we are going to enter dermatology and gastroenterology with our specialty business. As we enter, there also we will reach to 85 to 90% of the target customer coverage. So it's very critical for us. Second is productive.
Yeah. Sure. Sir, I just wanted to ask you a little more about whether you're interested in any brand acquisitions. And I asked this because, in FY23, I think you had cash of almost 115 crores on your books. What would the utilization of that cash be? And would any of it go into acquiring any brands?
I think you did ask this question, Sonia, earlier as well, I remember. We are having the cash surplus, and cash surplus is increasing quarter after quarter. And this cash surplus is intended to be used in business growth. M&A is very much in our horizon. It's just that we need to get the right candidate. We have defined clearly our acquisition strategy. We have identified the therapies, we identified the brand, we identified the customer segments, and we are looking out. We are doing diligence at our end. And it's just that when we get the right candidate, we know the valuations are crazy, and we don't want to take a step which disturbs the current growth trajectory which we have created for the last 5 years in increasing the EBITDA margin. We don't want to disturb that. Nevertheless, M&A is very much in the horizon, and we are active in that space, as I mentioned to you earlier.
Okay, just a quick two-part question. Naprosyn, which we had touched upon earlier, the painkiller brand, how much do you think it can grow to? When do you expect it to probably become a 100 crore brand? And two, what are you assuming when it comes to your API business? Because that's been a little volatile and fluctuating. It managed to recover in the previous quarter.
Okay, thanks for that question. Naprosyn, you rightly mentioned the painkiller brand, which was 18 crore in 4 years back. Now it has crossed 60 crore last year. And next target is 100 crore. And I expect that 100 crore to be achieved in the next couple of years max, and for that we have a very clearly defined life cycle management strategy in place, which is what we are following. We had identified around 11 to 12 line extensions. We have launched around 4 now, and the other line extensions are being lined up, which will spur the growth of Naprosyn. And I don't think I should limit only up to 100 crore. This brand is slated to grow even farther. This is also belong to painkiller category, and therefore there is a possibility of this moving to OTX and OTC category, being a painkiller. So we are not eyeing at 100 crore alone. It is a significantly more growth potential, and we'll exploit all possible strategies and opportunity to capitalize on this painkiller brand.
Okay, Mr. Sikri, all the best. Thanks a lot for joining in and speaking about your business as well as the way forward. We appreciate your thoughts. That's RPG Life Sciences, a gain of around 1% today. But let's do one thing. Let's take a quick commercial break.